Hi, good afternoon. I do apologize. I'm not sure what happened right there. It was a bit of a technical glitch, but we were going through legal office expense management and really setting the stage for the agenda of how best you can manage your expenses, both for disbursements as well as office expenses, right? And the expectations from the Law Society with regards to how you manage the documents that reflect or tell the story around how you manage this. Okay. We talked about disbursement. We could talk about trust and general being two different financial vehicles that you could use to manage and incur these expenses from. We talked about office expenses as a means for you to capture on a timely basis all the expenses that you incur as a company or a business, right from your rent to you paying for your phone bills, your cable bills sometimes maybe, bank charges, right? Purchase of software, purchase of a laptop. And interestingly, if you want to think about purchase of software, because any investment that you make in software, any investment that you make in technology as a business, definitely an office expense that you can write off on, right? It's an expense nevertheless when you pay for it, but as you file your taxes, you certainly want to be cognizant these are expenses that you can write off as a business. And we certainly talk about expense book and how you as a business owner should stay on top of these expenses, be it disbursements or office expenses, so that you're allocating your time as well as the time of your front office staff to distinctly manage these two, but at the same time have right processes and the documents to combine data when needed, such as the expense book. Okay. So we'll first talk about the disbursement, what it is, and how best you can manage. For those who just joined us, to friends, yes, today's webinar is accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. The title is Law Office Expense Management. Okay. All righty. Let's continue down this path. So we'll first talk about disbursements. As I mentioned before, it is certainly a type of an expense, but it's an expense that you pay out or disperse on behalf of your client. And I always reiterate that more specifically, it's an expense that you incur on behalf of the client's file, because the nature of a disbursement varies from client to client, from file to file. So you can have a single client handling multiple files, and each file, depending on the area of practice and nature of the business in itself, has its own varied natures of expense types. Hence, keep in mind that disbursement is a way for you to categorize expenses that you incur as you execute a file on behalf of a client or a customer and specific to a file in itself. So layman's term, it's expenses incurred on behalf of your client by your legal office. I'll go one step further and say it's incurred in a specific client file. From an accounting perspective, and this is where really the twist is, it's important that you have a mechanism or a process or a technology that allows you to record these expenses so that you're then able to appropriately recover these expenses, because that just makes business sense, because this was never your money to be earned to begin with. The expenses that you incurred on behalf of a client's file, it could be an application fee or a court fee. It's really not your office expense. It's an expense that you have taken the responsibility for bearing prior or asking the client in advance, either through a retainer or otherwise, right? So it only makes sense for you to be able to track them so that you can, on a timely manner, report them and recover them. Track, report, recover. Or I could always talk about the 3 R's: record, report, and recover. Okay? And from a Law Society's perspective, there are certain documents such as the expense book, the ledgers and journals. They expect you to capture the story around what are these disbursements, who are these clients, what are these files that are being used, are there any taxes accredited or associated with these expenses, and so on and so forth. On the other hand, you of course have your office expenses. This is the other type of expense that you may incur as a business, and this is very straightforward and standard. It's kind of common across all businesses, yeah. And it's the act of you paying out money or expending or incurring expenses on behalf of your own business. This has nothing to do with your client. This is all of that you have to do as a business owner to keep the lights on, to run your office, and make it profitable, right? From marketing to sales, business cards, technology, software, phone lines, rent, right? All of the things that you have to do to run your business. From an accounting perspective, though, it's interestingly that you are needed as a business owner in this wonderful country of Canada that you manage your taxes because you file your taxes. And I'm talking about business taxes. And it's very important from a CRA standpoint, the revenue agency, to know how much of income and expenses you have, because that really boils down to how much taxes you owe them or need to receive from the government. And then if you're also filing for provincial taxes like a HST, GST, PST for your incorporation, then you have, of course, that vehicle an opportunity to file them on a monthly, quarterly basis based on the HST that you receive from clients. So every time you invoice a client, if you have a HST number, then you, of course, will add 13%, for example, in Ontario, the GST 5 and 8% elsewhere in other provinces, right? Each province is different. Quebec has its own taxes. So based on your own jurisdictional taxes, you would add that as part of that invoice, and that's HST that you've received. And now as you expend or pay for these expenses for your businesses, the next time you pay your Rogers bill or your Bill Canada bill, or if you're renting, and if these businesses are charging you HST or GST, PST, and now those are the taxes that you're paying as a business. Now, what you bring from your client minus what you pay as part of your expenses finally boils down to how much of HST that you need to pay back or recover back from the business, or back from the government, right? So it's very critical that you find a way to first appreciate the difference between client-related expenses that you are going to incur, as well as business-related expense that you will certainly incur in running your business. And the underlying truth between both these different types of expenses is that you need to find a way to record, report, and in some cases recover, in some cases not. So long story short, one of the key differences, the disbursement is recoverable, which means that you will get back what you paid for in your client in the form of an invoice payment, but with the caveat, of course, that you do it in a timely manner, pertaining to the retainer or engagement letter that you sign with your client, right? So if you haven't done the due diligence of recording and reporting through that invoice of the expense that you've incurred, sometimes the customer might contest and say, hey, well, you did not do this on time. I'm not sure if I should be liable to pay this. Let's say the file closed and you haven't done the necessary work. And just, that puts you in a situation where there are high chances of you not being able to recover that. Okay. Whereas in the office expenses, it's not recoverable. It's expenses that you have. At the least, what you're doing that, a big favor you're doing yourself is you're using that expense as write-offs. You're using that expense to showcase how much of money you've received and paid for, potentially reducing your tax liability. And especially, as I mentioned before, and I want to reinvent the wheel again, but if you are filed for HST, GST, and PST, then of course, how you track them really can also come down to your profit margin. And it also affects disbursements. So if you are tracking disbursements and if these disbursements have taxes associated. Some of the disbursements don't have taxes associated with them. We often talk about the examples of application fee, court fee, anything that's government related are, tax exempt. But if there are other types of expenses, or disbursements rather, then they may come with a tax associated. Regardless, it's important to track them. All right, so we talk about the 3 R's, and we'll first start with the first R, which is how do you record these disbursements? And let's start with disbursements. Yeah, I'm sure you're already doing it in some shape or form today. If you are an experienced legal practitioner who's been in business for several years now, and there's always room for improvement. There's always better ways of managing what we do. And we've gotten to a point where we can be further efficient, and of course, we've done exceedingly well for ourselves. But now it's a time to scale. You get more people to be at that same level of efficiency, which means that you're helping grow the business. But fundamentally, if you're looking to start, and if you're someone who's just getting started with your legal practice, it's key to understand there's very different vehicles that you could use to record activities that happen in your legal business. Expenses are just one type of activity, right? You have revenue, which is another type of activity. There are dockets that you do that you're very familiar with. That's another type of activity. Client intake is another type of activity. So as a legal practice, right, there are many different types of activities that occur. Disbursements and expenses being one of the key ones that you need to have a really strong focus on. So how do I record a disbursement? The general rule that we talk about often and we advocate is follow your retainer letter, follow your engagement letter, and if possible, in those letters, ensure that you're capturing or recording them as soon as they occur. So retainer or engagement letter may dictate how and when you report, but you as a business should have the discipline to be able to capture these expenses as and when they occur. If you've just paid for an application fee, make it a point to write it down. If you're using a legal accounting system or any other types of system, enter it at the end of the day or as and when it happens. Sometimes you can actually write checks out of legal accounting systems. So if you're paying an application fee, you can go into the system, go into the specific file, and then draw a disbursement right out of that file and write a check for that, right? So that's really kind of maturity in how you handle with recording it. So record them as and when they happen. Perfect. Now the question is, what am I recording? What are all the attributes that I need to record as part of that disbursement record keeping? So very straightforward, practical, fundamental attributes. As I mentioned, disbursements are expenses on behalf of the client's file. So the question fundamentally begins with, who is that client and what is that file? Right. Then comes important time-based questions, which is, when did this disbursement occur? Because whether it's revenue or expense, time plays a very critical part in you being able to close your books on a monthly basis. But that's another task or activity that you do as a legal practice, which is reconciling. And hence, we're capturing the time. And the other reason why we're capturing the time is so that it matches with the expectation from the law society when they're asking you for your expense book or your journal. So, who's the client? What's the file? And in the context of that, when did this disbursement occur? So 3. Okay. How much was the amount that you paid for this disbursement? Right? And what is the reason for that expense or disbursement? Right? Yes, we know it's a disbursement. Okay. But it just goes one step further for you to just elaborate a little bit further on the type of expense. One, it gives clarity to your customer as you reflect that in an invoice. So it's not just a random, oh, here's $100, period. Just pay me for it. It just makes you look professional by saying, here's $100 that I used to pay for your application fee. Here's $100 that I paid the Ministry of Attorney General for your court fee. So what is the reason for that? The other reason for why you want to capture the reason, and I'm sorry I used the word reason twice in the statement. There's no reason for it, but nevertheless, the reason why you want to capture the reason, because you as a business want to improve the categorization of where you're spending these disbursements. So you can plan better the next time you're intaking a client in that area of practice. For example, today, if you're using uLaw as a legal practice management system, you know that you can capture the various different categories of expenses, and you can match them to the types of areas of practices that you deliver your business. So you could say family law, high on expense, small claims, low on disbursement, right? So the next time you're intaking a small claims for family law or criminal, then you kind of know the nature of expenses related to that particular area of practice. If it's real estate, then you know for sure you're using a third-party system to bring in line item after line item of expenses. That's probably one of the few areas of practices where you have to deal with many line items of disbursements, right? From paper to fax to land transfer fees. There's quite a few fees and disbursements involved with the real estate transaction. Okay? So who's the client? What's the file number, or what is the file name? When was the disbursement paid? How much? That is the amount. What is the reason? And the last most important question is, how was this payment made? Well, the reason again for how was this payment made is really comes down to your nature of business. Did you pay it out of your business credit card? Did you pay this out of your own pocket? Did this come out of your debit card? Again, going back to facilitating the reconciliation process when time comes for you to do that. You might not recognize or realize the value of all of this when you're first getting started, or even if you're a seasoned campaigner, it pretty much skips your mind because you are focusing on revenue. You're focusing on marketing and how can I make more money. But if you can help yourself by categorizing them, tracking them, recording them in a timely manner, time comes for reconciliation, which is one task that everyone's really irritated about. You're just helping yourself one step further by reducing the irritation because you've already done that first day of the week. So when time comes from the last day of the week, you've already done all the work. So that reconciliation is a breeze. It's just easier for you to know that. And also, when we talk about how did you pay for it, fundamentally we discussed the two vehicles that you have as a legal business. Very few businesses have this. Did you pay this out of your trust account? Did you pay this out of your general account? Okay? If you did pay this out of your general account, then of course there are certain steps that you take how best to recover it. So how do you manage disbursements? This is how you have a plan of action to capture all these attributes as part of that expense. We spoke about these two different vehicles. It's pretty interesting that we have, as a legal business, this trust account, and we have an operating or a general account. If you've started your business, you probably went to the financial institution and you've opened up trust or general. Now, if you don't have a trust account, and we know a lot of friends who don't have that in the legal business, that's totally fine. You're missing out on an opportunity to de-risk some of the recoverables that sometimes are lost in transaction or translation. But that's okay. Every business is unique in its own sense, and you have your own comfort. We'll talk about the differences between how you manage expenses or disbursements out of trust, how you pay it out of trust, and what you should as steps in terms of record keeping. And we'll also talk about the opportunity for you to pay for these disbursements out of your operating account and the steps that you should expect in terms of record keeping if you took that path. There's no harm in combining these two in a single file. It really comes down to your discipline of being able to track them, report, and recover. We'll first get started with the trust account. Okay, so why not pay straight from the trust? We always advocate this if you can, especially if you're matured as a business and you're growing, you really want to reduce the amount of paperwork and repetitive tasks that you have to do, reduce the record keeping. If that's the case, you've learned through the ropes of how to get there, then just pay out a trust account. What that really means is that this was never money to be meant to be recorded as revenue, unless you're trying to have a margin with your expense. But if not, if it's an application fee, it's $100 that you have to pay the government. It's not $110 for Johnny Brown, and it's not $120 for Alex Smith. It's $100 period, no matter who it is. You are a medium of facilitating a transaction between your client and the government. It's just passed through. But in being able to pass through that, you unfortunately have to go through a few hoops to take that money back. So first you pay this on behalf of your client to the government. Now you have to wait for the client to pay you back because you've already paid the application fee. Often when you don't use your leap of faith with your customer that they do pay you after the fact, right? With the trust account, what really happens is that you receive a retainer, which is money in advance that you get from your customer before you can get started with it. Assuming you have a trust account, assuming you're going down the path of accepting a retainer, you first accept that, deposit that retainer into your trust account. Let's say there's $1,000. You get that into your trust. Now you have your first disbursements of an application fee, and you're thinking, do I use trust or general? And you're like, I already have money in the trust account for this client. He or she's been really good to pay me in advance. I'll pass through this expense right from the trust. And hence, you're going to write a check or whatever means of paying that application fee right out of the trust account. But critical is for it to capture everything we discussed previously, which is who was it for, which file, yada, 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 all those attributes of that disbursement. And by doing that through the trust account, you don't have to wait. Go back to your client and be at their mercy to wait for a payment to be made. You don't even have to reflect that in an invoice and wait for payment. You don't even have to do an eligible trust transfer to move money from trust to general. All you do is you pay that expense out of trust and you're done with it. You reflect it at the end of the day in your statement of activity or on your trust ledger to show that that $100 was removed from the trust account for this such and such reason. Very simple. Now, life is not that simple all the time. So if you're going to be using the general account or operating account, then you have two opportunities. You may still be able to use that retainer account. So let's say the application fee was paid right from trust. So there's $1,000 minus $100 of $900 sitting in your trust account. Now you have your second expense, which is, let's say, a court fee. Of course, it's a great candidate for being paid right off trust account. But you don't. You pay it out of your operating account. Or let's say we take some other example. Let's say there is a fax or paper, travel, mileage. There could be many different types of disbursements depending on the nature of business. And let's assume you're paying that off your general account. Because you have the safety haven of your trust and the $900 still left in your trust account, what you can certainly do is pay for that expense. Absolutely. So there's a really important point which talks about the LSO rules around deductions from trust without telling the client. That's why we talk about the retainer letter and the engagement letter as a means for you to share how best you do business as a business. So that's why I said it really boils down to the that legal document between your business and the client. So absolutely correct. It all starts there, and you have to be very clear in saying that, hey, this is how I transact my disbursements. I will be using trust account, in which case I will pay for it and reflect it. And if you're going to be paying out of your general account, talking about the rules about how best you release that. Absolutely correct. But depending on, we're kind of making an assumption, we've already done that due diligence with our client, and they know that this is how you're going to transact. Okay? Oh, absolutely. That's perfect. So if you're paying out of your general account, but you have trust money still left, then another opportunity to reduce the bookkeeping is for you to now be able to pay for this expense out of your general account. Now, make it very important for you to do one additional step, which is you have to reflect it in your invoice. Invoice is a means for you to recover. And now you have to by doing a single trust transfer from trust to general. Again, I have to put this in one. I have to incur through my general account, and I'm going to be recovering this as a business transfer. A very important step to recover that. And in some jurisdictions, such as Ontario, if you do a trust transfer from an electronic or a bank to a general, electronically fill out a form. So keep that in mind, that that's the additional set of work that you have to do. The third example is where there is no trust at all. There's no retainer to begin with. This is completely being run on an operating account, in which case you pay for this expense from your general or operating account. There's no safe haven as a trust account to draw out of or pay straight from, and hence you're generating the invoice. Yes, and I really hope that you're able to hear me now. I do apologize. There were some issues here. This is kind of the first time that I've had this. Okay. I'm going to make some changes here. Hello? I hope you can still hear me. Would appreciate if you could just text on the chat if you can hear me okay. Awesome. Well, thank you so much for your patience, and I was like, what happened there, right? Alrighty, so we were just talking about expenses, and we were talking about disbursements, how you can use trust in general, wonderful steps that you do. I'm going to go back to the slide where we spoke about disbursements and how you manage them through trust and trust with operating account, expenses from the operating account without trust. So those are the three different differences. And with each difference comes additional paperwork, additional steps on your behalf to record, recover, and just want to make sure that you're clear that those are the steps involved. And we'll talk about the types of disbursements and which types of disbursements are great candidates for whether you use the trust account or should you consider the general account. Because it's interestingly enough, I've spoken to many legal friends and practitioners and clients, and some of them often talk about, yes, I do understand trust, I do understand that, the paperwork is less, but it's just so more convenient to use my personal credit card. It is just so convenient for me to use my business credit card, and sometimes I'm earning points on these cards, right? And hence, it just makes a great candidate, and that's totally fine, and that's completely cool, provided that you have the ability to recover them on time. The biggest challenges we face as a partner in crime with you, as a software company, as someone who's really looking out for you to do your business well, is when you don't recover that. We've seen cases where customers have not paid for those expenses, and then that's its own rabbit hole in itself, and that's all we want you to be cognizant of. Okay? So if you are considering the types of disbursements, if it's a billable type of disbursement, like the one we discussed, application fee or court fee, then yes, by all means, you could use both trust and general. Trust is a great candidate for billables. Another great example would be if you're recovering expenses on actuals. So if you paid a third-party person and you're recovering the exact amount that you paid that third party, no profit or loss margin, again, great candidate to pass through that expense through your trust account. If it's recovery of any expense which is not on the actuals, and with cases such as unit rate or mileage, because again, that's not specifically determined, then we recommend that you use the general account, though the trust is a great way of doing that. The one recommendation we would make is if you are starting this new year, do your best to have a retainer in place in every case possible, because that is your ability to always fall back and be able to recover that through that eligible trust transfer. Okay. And the beauty of all this is there are wonderful black and white documents that you need to produce when asked for. Produce on a timely manner, on a monthly manner, bi-weekly, whatever is best suited to your business. But at a minimum, it's a monthly. You have to do it on a monthly basis. It becomes an important supporting document to your reconciliation as well. Okay. So what are some of the documents we're talking about here? We're talking about ledgers. We're talking about journals. We've discussed this in some of the other CPD sessions. We'll talk about trust and general, both having its own ledgers and journal documents. And of course, with journals, you have some added information, right, such as what is the method of payment. We spoke about that. It becomes easier for you, especially if you have to backtrack and if you do an audit trail where the money is flowing from and to. The journal and the ledger together tell you it's become a complete puzzle to tell you the story, to tell the auditor the story, if and when they want to see it. Okay, and a very important aspect that we often see is ensuring that you're capturing the taxes associated with these expenses. That's very critical so that you can log those taxes appropriately, as we discussed earlier, based on the types of taxes that you owe or receive from. So in your trust ledger, if you're paying right out of trust, you're going to see that as a disbursement. And the journal, of course, would tell you the method used to pay that application fee, which would say certified check, right? If this is general, then there's, of course, a ledger and journal for that. The ledger will show you specifically the disbursement billed with any HST involved. The journal will tell you how you paid for it. Maybe you used your business credit card. And the ledger will also tell you when you recover that money by generating an invoice, and when the money comes back into your general account, or when you do a trust transfer from trust to general, in which case that activity reflects in two different books, one in your trust, as money leaving your trust account through that eligible trust transfer, and entering your general account as a means for you to recover. Okay? Alrighty, so with about 40 minutes gone, and I've pretty much been talking to myself here, and as you wonderful people have been listening to me, we now we talk about the office expense. We've discussed enough about disbursements, the three means in which you can disperse and recover. And now we talk about the other side of your business, which also deals with expenses. And that is your office expense. This is for you to record expenses or payments that you make on behalf of your business to keep the lights on, to keep the office going, right? The one such thing different between that and this is the sense of urgency, right? We often think that because this is an office expense, I have pretty much control. There's really no law society associated with this. So let me do this at my own terms. At the least, as a business owner, I deserve that freedom. And absolutely correct. You do that. You have your freedom. There's a lesser sense of, I wouldn't say responsibility, lesser sense of someone looking over your shoulder for sure. But the fact that you're doing that to report to somebody, if you can apply the same discipline for this, you're actually going to do better for yourself. Because discipline around office expenses is directly related to your own business hygiene and the bookkeeping of your business. Right? There are so many different, and we continue to advocate as a legal accounting software that if you can bring the same discipline and the sincerity and the seriousness around managing disbursements or law society or client-related files into your own office bookkeeping, then you're going to see the health or the clarity in understanding the health of your business raise that much further. And why do I say that? Because one, it affects your bottom line. Whether you're a business that captures your P&L on a monthly, quarterly, or maybe you want to capture only on a yearly basis, we at least recommend monthly, if not weekly. Worst case, quarterly, but definitely not go beyond quarterly. Reviewing your P&L monthly basis is very critical, right? What are the types of expenses we're talking, and how are we recording them today? As I mentioned before, even before you get started with your revenue, sometimes you're paying out of expenses. Law society fees, paying your marketing fees to promote this on Facebook, Twitter, LinkedIn, you're paying for these, Google. If you have the physical office, then you're paying for that rental space, you're paying for stationery, you're paying, if you're a growing firm, you're paying salaries, that's office expense. Corporate taxes, even expenses to pay back borrowings that you have. All these are expenses that you're dealing with. The same 3 R's apply to them as well, right? How do you record them? How do you report them? And maybe you don't recover them, but you certainly are able to maximize the bottom line by reporting them and recording them on time. How do I record them? You record them as and when they happen. And this is very, very interesting, very, very critical, because often we find you might have an expense. Let's say a gas expense, you go to Petro-Canada, you pay for it, it's an office expense, but you lose the bill. So a good discipline that I've kind of helped me and some other friends too is take a photo of that, upload it into Dropbox, Google Drive, OneDrive. At least now you have a digital repository of that expense. Whether you're using OCR technology or you're coming back to the office or coming back home to retype it in, make it a habit. As we evolve the uLaw platform, we're starting to talk about how we can use the mobile app to enter expenses. Today you can do a lot of client intake, you can do docketing, but we're evolving this year the platform to also include entering expenses, which would be a game changer for our clients. And that's another way. And if you're not using the platform, using some other platform, explore the use of technology to be able to capture the moment and capture these expenses as and when they happen. Let's say you say, hey, I'm not that kind of person. That's not how I run it because I have so many expenses. Then you have tools such as bank imports that allows you then have the discipline of maybe having 1 or 2 cards where you're transacting these expenses right out of that business credit card. So when you look at the business credit card at the end of the week, you know all the expenses that have been captured in one single source of truth. And then when you reconcile it, you can import that statement into your bookkeeping system. That way you're not typing them. And all you're doing is approving each and every transaction and saying, yeah, that is correct. It did go through. This is what it was. You're validating rather than entering information. But when you're capturing it, be certain if you're not using import, if you're not using tools, you're using this on a manual basis, and that's fine too. Then be very, very cognizant of capturing the important attributes, like how we had attributes for the client-related expenses. Very similar here. Of course, you don't have a client and a file associated with it. You certainly will have a date. What is the name, description of that expense? You know, gas expenses, rental, whatever, right? Again, ability for you to categorize that and see where you're maxing out on types of expenses. How did you pay for it? Who was this paid to? So who are the top vendors that you're paying? And when we talk about how was it paid, we also, just like how you have trust in general, as a business owner, you might often find yourself in a point where you're paying for office expense, you have to decide whether you're paying this out of your business or if you're paying it out of what's called an owner's pocket. If you're the owner of the business or if you're someone who's working at the business, you're at the Walmart, you forgot your wallet, you need to fax, or you're in Staples and you need to fax, or you need to purchase something, you use your own personal money. There's 2 steps. You need to record it, report it, and maybe there is where you have to recover it. So now you're recovering that expense that you paid on behalf of your business back from the business back into your personal money. Okay, hope I'm not confusing you. So on hindsight, the 3 R's apply to both disbursements and maybe some cases of office expense recording, right? And of course, you don't have law society related storytelling, but you have 2 important areas. One, of course, the CRA, because you're going to capture these expenses and report them as a line item in your overall P&L when you're filing taxes. You may think, hey, that's a year, that's 1 year ahead of time. But having that discipline right from month 1 we're all going to assimilate for better hygiene and lesser time spent during month 12. I know it's easier said than done. We often end up around month 10, 11, 12 doing catch-up, and it might certainly just be the paradox of our lives. But again, it's certainly a great habit to have, and you have the right tools today that can facilitate it, that can motivate you to do it right from month 1. So one is for you to showcase it to CRA about your bottom line. The next, talking about HST, GST, BST, we spoke about that. And the most important document that we often talk about is the expense book. And this is critical for a legal practice because the expense book is where you combine the disbursements that are office-related, client-related expenses. You combine those along with expenses that you incurred on behalf of your business in a single document. The legal accounting system facilitates the data capture, the recording rather, and the timely reporting and recovering. But the most important thing is it allows you to capture or record the transactions from both client and office related so that it can generate that report from one single system. If you're using 2 different systems or 3 different systems to record them, then you have to do the manual effort of combining these transactions date-wise into a single document called the expense book. Okay. Last but not the least, we talk about analytics. As we step in post-COVID and as we step into the new age of digital transformation that's happening around us, we're going to certainly see, there was a time when people spoke about content being king, but now everyone's talking about data kind of being the kingmaker. How you make decisions, very critical decisions, whether it's you, the government, anybody, make important decisions based on the information that you gather. The processing of data gives you the information. We've learned that there's a lot of data sitting in your own office, and it's to your best advantage to process that data so that you can drive inspiration or drive certain motivation to act on the information and what it has to tell you. So categorizing your expenses. Maybe your rent is high. That's the information you've gathered. Maybe your expense or your disbursements for a specific type of area of practice is high and you don't recover, the days of sale are not as great, which means maybe you don't have the right discipline to handle certain types of areas of practices. That can give you information. What you do with that information comes down to your own individual style, but it's there for you to capture, and hence analytics processes the data in your system and at no cost in some cases gives you the information so that you can make those important next steps. And often I know we're talking about legal accounting software. We're not speaking about a specific product here, but the business of the legal accounting software. What legal accounting software does is facilitates those 3 R's, and sometimes I forget what those 3 R's are, but I'll repeat it. You record, you report, and recover. It makes those 3 R's easy, faster, and most importantly, compliant. Because when you report back information back to whether it's law society or otherwise, it's expected in a certain format. It can't just be any random format. It's expected in a format, and it's readily available for you to generate. That's the key. Why do I use it? That's the key. Okay. And I know there's today's not been the best when it comes to technology. Had some challenges. I certainly do appreciate and greatly thank you for being patient through this whole webinar. We had a late start into it as well. So if you can bear with me, I'm just going to take a couple of minutes just to walk you through everything I've been talking about, and maybe call it. I'm going to walk into my fixed use legal practice from Roger Moore, and let me choose a specific client. I'm not going to waste your time. I'll say Peter Manning. Let me go into this client of mine, Peter Manning. And we'll do the act of disbursements real quick. We'll go into a matter. So this is Peter Manning. We'll go into a specific matter for Peter. Yeah, we'll call it an estate, and we'll say I'll just turn off this analytical bell. So let's say you created a file. uLaw, of course, like other legal accounting software, will create your unique client number. And we'll talk about disbursements. We'll talk about retainer. So let's say, assume we got a retainer from Peter. We're going to accept it. Let's say he paid us through a check. Got deposited straight into my TD Canada trust account. Give him a receipt, and I hit apply. So I'm starting off with the basis or the understanding that there is a trust account involved, or this was an estate. Maybe not practical use case, but I'll run with it anyways. You can send that receipt to Peter, thank him for his business. It's all good. Now we'll talk about disbursements. We talked about the first example where you're paying for the application fee right out of trust. So when time comes to paying off that disbursement, depending on how you use it, you can, in uLaw, pay for that disbursement right from trust. So it's withdrawal from the trust account of $100, assuming, of course, you've agreed upon this with your client. You could say this is a court fee or an application fee. You paid this to the Ministry of Finance. So we're capturing who was this paid to, when was this paid. We know the matter, we know the file number, we know the method, we know the amount, and we know where it's coming out of. You can even print that check, which means if you leave your check leaflet on your printer, when you print, this PDF document that will generate would emboss right on top of that. And this is what that check would look like. Again, you can have this as a top check, bottom check, or middle check, with the remittances at the bottom or top. Okay. Now, you can notice that the $1,000 retainer directly dropped to $900. So if I were to do my trust ledger, this is what we're talking about recording. We don't have to report yet. But now we're capturing the report aspect of it. Slower than usual. Clearly, you can see we captured the $1,000 that came in, and we've captured automatically the $100 that is left. Already done, automatically. Okay? So no paperwork here. Audit trail is a breeze. We'll move on to the next example that I spoke about. And that is paying out of general. But I do have a retainer involved. I can pay this out of my general account. I'll call this court fee. Say this is $200. I'll say it's tax exempt. Please pay on behalf of the client. I'll say this is paid to the Ministry of Attorney General. And this time it's coming out of my TD operating account. And this could be check. This could be anything else. Now, this is where I could have paid this out of my owner's pocket, my own debit card or my personal credit card. So you have the option of choosing whether it's coming out of your business bank account, whether it's your personal money coming out of your cash account. Nevertheless, you record this transaction as a general payment in a manner that has, and you can clearly see that there's an invoice pending. Next step, so an additional step that you have to do now that you did not do previously is create that invoice. Step 1. Okay, and once this invoice is generated, you send this to the client. The invoice will clearly state, based on the rules of the engagement, that you're moving this money from trust to general. Now, step 2, you have to make that movement from trust to general, both in real life as well as tell your bookkeeping system that you've done that. Okay. So I'll do what's called as a withdraw from trust invoice payment transfer. And you can see the $200. So essentially we've broken down, so we'll definitely take this question offline because we're very straightforward. The reason for us to have these different categories is if you know that this person is on actuals, you can click that. If you don't know if it's on actuals, you can click the first option. If it's a miscellaneous expense, so for example, if you've purchased a software and you have to divide, then you use a prepayment or disbursement. But if you don't know what that expense is and it's miscellaneous, so sometimes you may take your client out for dinner or lunch, that's a miscellaneous expense, and you can add that with disallowed expense. So sometimes you may have a tip, which may be disallowed, and you can see in the option. So there's many different nuances to disbursements too. So anytime you have the component of a tip, use the miscellaneous expense. If it's actuals, use the actuals. If it's otherwise, you can use the first option. So for the next one, you do the trust transfer. And here's the $200. Moving it from trust to general. Okay. So the bookkeeping, of course, is done automatically for you because you're dealing with the legal accounting system. But additional 2 steps from trust. So here's the $200 that left the trust account. But you'll also see on the other side of the fence the $200 coming into your business's general account. There it is. Trust transfer. Okay. All right. I want to be cognizant of time, and I certainly appreciate you waiting. The third, of course, would be the case where you have no trust involved, and hence you have to pay it out of disbursement, generate the invoice, and now wait for the client to pay you. And as soon as they paid you, you would now accept that payment. So you would say accept client payment. You'd accept the payment, and that's how you recover that money from the client. Okay. So with that, I'll bring it a close to today's webinar. It's being recorded, it will be available, and we've delivered these sessions in our previous webinars as well. The title for today's webinar, just CPD in nature, is Law Office Expense Management, accredited for 1 hour of professionalism CPD credits. Okay. Well, thank you very much for your time. Look forward to seeing you in our next webinar. Take care.